We have a discussion going for to understand what's happening in the sector. Mr. Vikash Singh, the lead sector analyst at Phillip Capital, as well as Mr. R.K. Goyal, the MD at Kalyani Steel, is joining us. Mr. Goyal, I wanted to begin with you and try and understand what's happening with respect to the market at this point of time, because we understand that there's just weak demand coming in from China at this point of time, and that is something which is expected to have a lot of impact on the global steel market. What's been your reading of what's happening in China?
As far as China is concerned, they have definitely increased the production. However, the internal demand is not picking up to the level it should have been. Hence, prices are going down in China. But at the same time, there is a big squeeze on their margins as commodity prices have not gone down to the level as compared to the price of the finished products. So this has not impacted much to the world, except that uh, it will create a glut, and there is a substantial price impact on prices of hot rolled coils or all commodity products, and the producers in India, including all other countries, their margins are also going down.
Okay. Just wanted to also understand, because we're reading several reports. I just wanted to get in a view from you then, Mr. Goyal. Given the fact that we are reading those reports of weak global demand, what is the environment on ground?
You see, we are basically in specialty steels. I can talk more about specialty steels, but at the same time, you see, the manufacturing activity level in Europe is definitely low. Now, since the manufacturing activity is low, the demand of steel and similar products is definitely impacted, and the demand is definitely low. As far as India is concerned, as far as specialty steel is concerned, in India, the automobile production is very good, it is robust, and it is continuously increasing. So there is a good demand for specialty steels.
Hi, let me bring you also into the discussion. We understand that the steel prices back home are a bit on the weaker side. Could you tell us what's happening on the ground? What's the demand and how's the pricing of domestic steel? Vikas, the question is for you.
Okay, so the prices have been falling, but we have to understand that we are entering monsoon season and there always a seasonal weakness. This is also coincided with the bad Chinese data and the Chinese price fall also. So while on the parity, we continue to readjust ourselves lower because of the cheaper imports data. But a good part is also contributed by the supposedly restocking which happens prior to monsoon in India.
Just
So
hold.
in June also, you can expect some price correction going forward as well.
Okay, expect a bit of a price correction, but hold that thought, gentlemen. We have the live visuals coming in from the India Economic Conclave. The Defense Minister, Mr. Rajnath Singh, is there for you on the screen. He's just joined the party at IEC. He's going to speak in just a short while from now, and we'll get to know what's happening with the India defense space as well, because that's one sunrise sector that we have been talking about. The focus on indigenization, the focus of creating value back home as well. So that's all that we'll hear from the minister later in the later this hour itself. And you also have Navika and MK Anand right there on the screen. So a lot of important discussions happening, and we'll get you the key highlights as far as IEC is concerned. But coming back to our discussion, Vikash, tell us, of course, there's a bit of a softness when it comes to the monsoon period, as you talked about as well. But if you had to make your top recommendations at this point of time from the entire metals basket, what does the pecking order stand at?
So we are recommending sale largely because coking coal prices have come down significantly. Plus, the iron ore cost inflation would also not impact them. So our expectation is their margin expansion would be good. They would give some volume growth also, while Tata and JSPL currently lacks on the volume growth side. So sales should do a bit better, and if iron ore prices continues to correct, then JSW should also benefit going forward.
So that's a point coming in, Vikas. Let me bring Mr. Goyal back into the discussion, and I wanted to check with you of what's happening with the margins, because margin in Q4 improved due to lower raw material prices. But given the fact there's a bit of a slip in the domestic steel prices, as we just talked about, where do you see the margins trending from here on? Do you expect an expansion because coal prices, etc., are soft, or will it stay around the similar level, Mr. Goyal?
Margins were impacted very badly because of the ferroalloy prices increase, which we really could not get from the OEs as of now. That our request to them is still there. Hopefully, we will get some. So then I think we'll be neutral. Otherwise, as of now, we have a impact on our price, on our profits margins.
Right. Vikash, let's get in a sense from you then as to what the outlook is in terms of the commodity prices, whether or not you're expecting some sort of a rebound, and do you think that we will see global concerns continuing to persist and play spoil sport?
See, what we feel that the a large part of price correction has already been done. Some of the seasonal price correction, because depending on the severity and longevity of the monsoon, may continue for maybe 1 month. But then Chinese profitability has come down very low. It's almost closer to zero. Plus, if you look at the Chinese production, our expectation that the second half production would be lower than first half. That would bring in some demand supply balance, and they also has to make money, right? So effectively what we feel, though we would have a lag effect impact and 1Q margins might be a little bit lower, bouncing back in 2Q with the aid of coking coal, second half would definitely be better, and we don't expect a very significant price correction in the international market at this point of time.
As well as Mr. Goyal, thank you so much for joining us today.